Today's episode is brought to you by Security Financial Management.
Ooh, welcome back to Best Advice Podcast, guys. I'm your host, Rob Lovaglio, here as always with Austin Fatz Jacks and Mitchell Allen. Gentlemen, what's cracking?
Good morning, Robert.
Morning, Rob.
Good morning, gentlemen. How is your Tuesday morning going?
Swell.
Swimming the dream, brother.
Looking good, Billy Ray!
Feeling good, Lewis.
We like to start each episode with a powerful practice, a positive thing. We like to call this, give me something good.
Give me something good.
That's give me something good.
Something good. Well, I'm a big football advocate, in case you don't know.
Very strong.
Huge football fan. So.
Are you ready for some football?
I think something good is the playoffs are back. A lot of good football to be watched. Something kind of cool is, obviously, I'm sure everyone's aware of the fires and stuff going on in L.A. The Rams had a playoff game last night, and they had to be moved to Arizona. So I think the players had a lot of extra motivation, incentive to kind of play for the people of Los Angeles, and they dominated the Vikings. Yeah,
they were home game then, technically, huh?
Home game hosted in Arizona. So yeah.
Oh man, yeah.
So it's kind of cool that they won. City needed a win after what's going on there, so I thought that was pretty cool.
Very cool. Love it.
Love
it. Let's get to the question of the day. Today's question comes from Beth from St. Augustine. Beth, what you got for us?
You want to say something?
All right, football fans, Beth's question is, with Bitcoin reaching an all-time high, I'm eager to get involved, but also a bit anxious. What's a realistic approach to incorporating Bitcoin into my diversified investment portfolio?
Thank you, Beth. Gentlemen, who wants to start this off?
I'll take this one to start. So I think, to Beth's question about Bitcoin, how it relates to an overall portfolio, just a little backstory on Bitcoin for the last year, reached an all-time high of around 110,000, currently trading around 96,000. Volatile asset class, though, so that can go up and down. But over the last year, it's up about 130%. So, it's done super well. And as always, when things have that kind of success, people are eager to get that implemented into their portfolio. So, the way we see it and the way we position ourselves as core long-term wealth, and within those portfolios, you don't want to have overexposure to a certain asset class. And with Bitcoin, it can be super volatile, right? So, adding it to your diversified portfolio, our Kestra, our compliance umbrella, they won't allow us to hold more than 5% of Bitcoin in any account. So anytime we're getting more than 5% of a Bitcoin ETF, it's more readily available, accessible for individual investors for us to be able to incorporate it. Kestra won't allow us to hold more than 5%. So, that should speak to, the compliance division of our company. They're cautious when allowing us to, implement that into portfolio. So what I would say to anyone who's looking to incorporate that is, proceed with caution. It's a risky asset class, so don't invest more than you're unable to lose. Obviously, there's stories of people generating extreme wealth off of Bitcoin, but that's also, you don't hear as many of the stories about people losing a lot of money in it as well, because it can be super volatile.
Is it kind of like a alternative asset as like gold almost? Because I hear it's like it's the digital gold, right?
To some extent, yeah. And to talk about, cryptocurrency in general, most people think cryptocurrency is mainly Bitcoin. What they don't know is there's actually 10,000 coins, probably 10,000 plus available.
Wow.
With, thousands of them are completely inactive. They've been invested in and people have pulled all their money out, so they're pretty much inactive. So what we have Bitcoin, which is your major asset, your biggest. Then your second biggest is Ether, which Bitcoin has 3 times the amount of Ether right now. So, people trade trillions of dollars of Bitcoin every year. And, part of the reason is, as Austin mentioned, there's now a Bitcoin exchange traded fund. So the SEC granted approval for some companies to create a Bitcoin spot ETF, which has helped fuel some of that, that surge that you're talking about.
Sure.
But to look at the role in a portfolio that a cryptocurrency would have, it has the word currency in it. And I don't think at this moment it's ready to be, quote, a currency. It's too volatile. It's 4 times the level of volatility as the S&P 500. It's not readily accepted. You can't go to Publix and use your Bitcoin to buy a gallon of milk. And wouldn't it be something if you had X Bitcoin the exact amount to get a gallon of milk, and then by the time you got to the grocery store, you had half that, just because how volatile it is.
Yeah.
So it's just not ready to be there yet. And if it's not a currency, what is it?
Tom also lost $30 million in crypto. Tom, how did you fall for that? I mean, even Gronk was like, me know that not real money. Like,
as you said, it's probably more of an asset, like an alternative. But with that, it doesn't produce any income. It's becoming less of a hedge to the market because its correlation is, over the last 3 years, has come up quite a bit. In 2010, it was probably like 0.2 correlated to the market. Now it's like 0.7.
Wow,
so it's risen quite a bit. So its role as a hedge is really not there as much anymore. So, as Austin said, I think 5% is, for a risk-tolerant investor, I think that's plenty.
Yeah.
But knowing that, as you said, you have to be able to lose the whole sum because it's just that volatile. It could go from 97,000 where it's at right now back to 20 as it's done before. So
absolutely,
got to be careful.
Yeah, your risk tolerance has got to be pretty high to be investing in this.
Well, I had heard something interesting. It's when building a portfolio, there's a saying that says wealth is built through concentration. So having smaller holdings, wealth is preserved through diversification. So we have to balance that with people's risk tolerance. If you're really trying to hit it big, you're going to take a lot of risk by having an over allocation or a concentrated position. Yeah. When you're trying to preserve your wealth, diversification is your friend. So as far as we're concerned, preservation is a big piece of it. Not taking on too much risk. So having some of the compliance pieces in line, like the 5% maximum for our portfolios, we're comfortable with that. We don't want to get overly risky. I
mean, to go back to football, sometimes your best offense is a good defense.
Yeah.
Makes total sense. So you got to preserve sometimes.
I think the surge kind of happened through institutional participation?
To some extent, I'd say.
Start the whole surge? Is that?
It could. It's more accessible in a brokerage account. Mm-hmm. So with this new ETF, you could go into your Robert Lovaglio individual account and you can buy it right then and sell it right then, as opposed to opening up your digital wallet and finding a buyer, which is safe and secure, as Bitcoin and blockchain technology is great for it, but it's not as easy to just
take baby
trade.
steps.
Take baby steps for sure,
and get a feel for it. Thank you, Beth. Hope that answered your question. Remember, folks, the secret to wealth is not what you earn; it's what you keep. Happy days, everybody.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed. If you have a question for the guys, email podcast@bestadvicepodcastguys.com.